Good evening traders, it's 9:42 here in the UK and this is our Commodity Tuesday breakdown. We're going to take a look at the yields, bonds, gold, silver and WTI. A couple of things I want to point out to you here is when we look at the 10-year yield, we can see that we've had a couple of rejections back here. The market moved up in October 18, testing around 3.2%. And then the 13th of, in fact, let's go to the weekly chart just to make it a little bit more accurate. So it's the 13th of June here. You can see we have this test high of 3.5% before we have that retracement that comes down to test a longer term descending trend line. And pretty much since the 1st of August, so right through August and first week of September, what we're seeing is an appreciation in yields. Now, as yields an increase in value, that becomes more attractive to investors, and conversely it means bonds are less attractive. And we can see that when bonds form their low, which was back on the 13th of June when yields formed their high, we're coming back down to test those areas. And as bonds sell off, this is having an impact on the precious metals. We're seeing gold sell off as well. So the question is, where does it go from here? So 136 was sort of a key barometer or barrier level to watch on bonds, and we pierced that, we've come back up. So basically the way I'm going to look at this right now is I want to see where this week closes. So if we look at the week of the 13th of June, it came all the way down, tested one, not quite 130, but 130, let's get it exact, 131.01. So price could push down as low as that. Now if we break those lows and close below this area, I think that's going to be a pretty bearish signal for bonds. If we look at it on the monthly, we can see that the previous monthly we've got swing low over here. The market then, once we close below on the monthly, we've seen the market now push down lower. So we are going to, in my opinion, we're going to test this wick, and potentially I think we could come down and test 127.30. So if we then relay this information and start looking across on what happens to gold, then where could we potentially see this market move to? So 1680 is a big barrier for gold, and it's been holding it well. But if we see bonds break, I will forecast that we're going to see a significant drop on gold. Gold has been a lovely trading day for us today and over the last few days, but you know, don't be surprised if we come down and test 1600, 1575 in this area here, maybe as low as 1453 if we get a significant break on bonds. But first thing we have to do is wait for that solid break below. The test of 1680, 1685, I feel that's coming. That'll just be, watch it with the low on bonds around 131. 131 breaks, expect to see a monster move on gold. I think it would just be, you can just imagine how many people's stops are underneath this area here, and that will trigger a lot of shorts, or not just shorts, but maybe coverings as well to hedge positions that people are in long. So watch for the waterfall. If we get through 1675, go through 1675, I expect to see an absolute meltdown in gold. Today's daily candle is a really significant candle, especially for intraday traders tomorrow. What we've seen is a break of Monday's high, Friday's high, and then we're closing below yesterday's low, which I suppose isn't really surprising considering it was bank holiday in the US, but it's a key reversal day today, whichever way you look at it. So if we are looking at shorting this market tomorrow, you can see we've had some lovely trades on this today. We took, I think, 3 trades. Did have a losing trade earlier through the London session, but it came back and paid nicely through US session. So what are we looking for? I think any sort of retracement, if we could potentially pull back into maybe sort of 1706, 17, see if we can find anything else. Yeah, I think around 1706, 1707, if we could get maybe a $6-7 rally. If price could pull up to 1709, then I'd be all over that. So if price could come up into this area here, we get some kind of, these can go now, they're done, we have no trades running. So I'll be looking at a rejection candle from 1709 to sell this market. Moving over to silver, we still have the same bearish positioning. Nolan, head trader here, he sent out a sell signal on this 4-hour candle here, which is running nicely in profit for our members. Now we're just going to be looking at holding on to this and trading it according to our trade management rules. But if you aren't short on these markets yet, and you are short, now you should be at least profits locked in, risk free on this trade. If you are looking to get short, then it's a matter of looking for smaller time frame pullbacks, and then looking for sellers to come back in. So I think anywhere around 18.25, if we could get a move back up into this area, then we could be looking for some nice price action to get short this market, which is going to be a similar area to where we got short off the 4-hour candle. So it's nice to be taking some profit off the table, especially when you're coming into areas where you can see a little bit of support here. Moving over to WTI to pretty much wrap up this evening's video, because we did look at bonds and yields and the correlation. So something we spoke about with our members was, someone asked me, would we be able to get long on a retest of this broken trend line? And ultimately, if you want to get long above the high of this candle, then you could do that and trade it into maybe the swing high here. But if we just zoom out a little bit, areas of interest that I would really like to sort of confirm movement would be short below around 80, call it 85, but around 84.80, somewhere through this area here, 85.90, sorry, 85.90. Want to be short somewhere through here, which we can see it'd be a break of these lows here and a break of this structure. And long, you could be looking, as long as you get a change of signal, change of trend. So that would require coming down to a smaller time frame, around the 4-hour, the 1-hour. We see a break above this area here, and I'd be looking for price to essentially move up like this and pull back into this area to get long. So either that, or you can see this base that's being formed. You want to see the market come down, pull back, retesting this area, sellers to come in to get short. So that's our commodity breakdown. We've obviously covered 10-year yields, inverse correlation with bonds, basically want to be short gold and silver, the precious metals, and then when it comes to oil, we'll look at either option depending on how the market moves. Whether it's going to be long above 90.5 or shorts below 87 once we get a nice solid break below support. Hope you've enjoyed the content tonight, and we look forward to seeing you in tomorrow's video. Good night, guys.